On the whole, gold is significantly less volatile than any other asset class. So if you've got a large risk in your portfolio, you can stabilize that by transferring some of your wealth into gold. Does that make sense? Okay. And again, risk factors that affect gold are much more different than anything else. Gold's price is affected by supply and demand. By the way, what I'm taking you through here is the basics. Does that make sense? I'm taking you through the basics of gold and silver. Why? Because I want to show you how to make money with this stuff. How many people want to know how to make money with this stuff? Do we need to step back into my office? How many people want to know how to make money with this stuff, right? So if you want to learn how to make money with something, do you or do you not need to know how the basics work? Thank you. Let's finish these basics quickly so we can get on to the money making. Now, the price responds to a demand change in supply and demand, right? If there's more demand, the price goes up. If there's more supply, the price goes down. Simple. Demand has shown a sustained growth in emerging markets of India, China, and Russia. Would you agree that there's a few billionaires popping up in India, China, and Russia, right? And these guys want to protect their wealth. They're not going to put it in the US dollar because there's a couple of things I'm going to explain to you afterwards. So they're running towards gold, okay? And this has created the foundation for the most positive outlook that the precious metal has seen in a decade, easily. And that's from now. That's not from 10 years ago. That's from now. And in the past year, the climb for gold above 1,900 per ounce is due to many factors, one being that people are losing faith in the dollar. So, the dollar is weak, would you agree? It's getting weaker, would you agree? Okay. In the last 5 years, it's the beginning of a major bull move in gold, similar to the CMV stands for? Say that louder. Below market value. How many people want to learn how to buy gold below market value? If I show you that today, would that be cool? Okay, I'm going to show you how to do that. If it goes down, by the way, we buy it below market value, and then we rent it out. How many people want to learn how to rent out their gold? Question is, would you own a buy-to-let property and not rent it out? Right? That's the right answer. Okay? So why do people own gold and not rent it out? Because they don't know how to do it. Right? It's the education. So I'm going to show, and institutions, by the way, have been doing this for the last 10 years. Do you think they've got an advantage? Okay. So if it goes down, who cares? You've got your cash income coming in. Right? If it stays flat, who cares? You've got your cash income coming in. It's like property, right? The only reason people have to liquidate their property portfolios now is because they overextended themselves. Does that make sense? Right? If you had a stable property portfolio, okay, and you were generating a monthly income from it, you could sit on that forever. The only reason people have to liquidate is because they overextended themselves. Simple. And if it goes up, you got your cash income plus your profit. Does this look like a much better scenario of investing in gold? Yes or no? Say that again, guys. Come on, louder. Yes or no? Okay. So we like to get paid to own gold, right? I was taught right from the start, you buy an asset, it's to generate cash flow. Does that make sense? Right? Everyone has been taught this, and yet everyone still goes out and buys gold bricks and bars because you got speakers telling you gold is the next thing, gold is the next thing. Everything on magazines, gold is the next thing. Why are smart investors going and buying gold when it doesn't generate a cash flow? What is the silver in the right form? In the right form, you can rent it out and generate a monthly income. Do you want to know what the right form is? Yes? I said we were going to have a chat, right? They're beating you over there in terms of response. Right? Do you want to know how to buy gold and silver in the right form? Yes? More like it. Okay. I'm going to show you how to hedge your risk in gold through the generation of cash flow. And I'm going to show you how to use margin loans and margin safely. Okay? So, sorted? Okay. How do we cash flow gold? Do you mind if I show you this? Because see, what happens is a lot of people listen to my webinars and seminars and things like that. And, you know, there's a lot more important reasons as to why you should be investing in gold. But everyone wants to get to the making money part, right? You'll make money, okay? You make money. Just ask any of the community members. I just got a testimonial in, first person who's traded a full year. Gold's gone up and down. She's made mistakes, never traded before, never invested before, and she's still 16% up on her portfolio, right? That's good for someone who's never done anything before. Imagine what her second year is going to be like. Does that make sense? Right? So that's why I applaud action takers. 16% and an education is better than nothing. And by the way, 16%, can anyone beat that in a bank? On to the more important stuff. So the make money part, you're okay with, right? I'm going to show you how to make the money, then we'll go over to why you need to actually do this and what's happening with the economy and things like that. Yes, sir. You're taking pictures of the slide without taking pictures of me? I'm offended, really. Right? Okay. Right. We use IGSs and ISSs, institutionalized gold securities, institutionalized silver securities. What are they? These are just funds, right? Big funds that are designed to have gold and silver as their primary asset form, but are tradable on the stock market. Now, let's see how your portfolio can build if you do it the smart way. This is the basic strategy, by the way. We're going to come over to the advanced one in a second. If you've got $10,000 invested, period one, you generate your 5%, $500. You go and buy 18.4 grams at this gold price, which means you've got your $10,000 plus your 18.4 grams of gold. Does that make sense? Right? What type of cash did you use to buy that gold with? Guys, really? What type of gold did you, what type of cash, sorry, I'm getting excited now. What type of cash did you use to buy that gold with? Free cash. Get excited. It's about free cash. Right? And you keep doing that on a monthly basis. And at the end of 12 months, you've got your $10,000 in gold plus a portfolio of 220 grams of gold on the side. And how much did that 220 grams of gold cost you to build up? Nothing. Is that a smarter way of investing in gold? Is that a better way? Do you think wealth can be protected much more efficiently if you did it this way? No. Go on, take a picture. It's okay. It's okay. Right. So, say you did this, because by the way, I'm not a trader. Don't know whether that's clear or not. I'm not a trader. I'm an investor. Right? I implore you to become investors too, not traders. Do you understand the difference between trading and investing? Right? Traders go into an asset, relying on that asset to make money in the next 10 minutes, the way the market situation is right now. And they go in a highly leveraged position, and they risk that capital. An investor goes into an asset class with the knowledge that they're going to be in it for the long term. How many people have got not only passive income to make now, but wealth to protect for the next 10 years? Right? So all the other guys don't want to protect your wealth. You just want to, let's go buy some Lamborghinis and bottles of champagne, and we can get rid of that for you easily. Right? You don't want to protect your wealth? You want to. So do you want to protect your wealth? Yes. Fantastic. Okay. Right. If you did that for 10 years, what have you got? You've got your $10,000 sitting in IGSs, right? Because you did it smartly, you've got your gold grams building up at 220 grams a year. So you've got 2,200 grams of gold after 10 years on top of your $10,000 gold value. So you've got now a total asset base of $10,000 plus $60,000 in gold, in gold that was used with what type of cash? What type of cash? Free cash, right? So your total asset base is now sitting at 70,000 rather than just you sitting on 10,000 of gold. Is that a smarter way of doing it? Right? What have I not included here? Inflation, okay. What else have I not included? Sorry? Okay, what else have I not included? Future price of gold, yeah? Think about it. What if gold goes, who thinks gold's going to go up over the next 10 years? So the rest of you, no, you don't think so? Who thinks gold's going to go up over the next 10 years? Right? So if you had a position like this, you would be making, your portfolio would be worth 140,000 based on estimated maths. Does that make sense? If you did it the old-fashioned way, your portfolio would be worth 20,000. Does that make sense? Is this a smarter way of doing it, especially if it takes you less than 3 hours a month to do it? Right? That's what we do. So, let me just clarify for you why my students pay me. Mark said that I'm the highest paid gold and silver investment coach in the UK. There's a reason why my students pay me. Right? Like I said, we've got CEOs of big companies wanting to invest their own wealth in gold and silver. There's a reason why my students pay me. And here's the reason. I specialize in helping people who it's right for, by the way, making one shift. You want to see what that shift is? You want to see what that shift is? If I show you that shift, would that be powerful? Right? This is your compounded portfolio. 10,000, 3% a month, right? Grows to 347,000 of gold value in 10 years. You want to see what the shift is? Watch the 3% figure, right? I specialize in helping people make one shift, increasing it by just 1%. I'm the 1% guy. I only deal with people who've got a mindset of being in the top 1%. And the reason for that is, when you make that 1% shift, your portfolio goes from 347,000 over 10 years to 1.1 million. Does that make sense? Does it now understand why some of the leading CEOs pay to find out how to do this? Imagine if you had 10 million to start off with. That's starting with just 10,000. Would that be a good fortune to leave to children, etc., in 10 years? Right? Now, this is just a reiteration of what I just said, by allowing yourself to have me help you make one shift, you're going from a net worth of £347,000 to 1.1 million in under 10 years. And it only takes you 3 hours a month to do it. Like I said, speak to the students and ask them. Is that powerful? Right? Was it worth me coming down to help you guys to do this? Yes? Okay.